Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. And for those of you who are new to us, we are the TSTWSYS008 traders, and our website is www.stochastic-magdi.com. For all trade, we use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. The title of the video is how to combine a stochastic pattern and Fibonacci. All right. In this video, we're going to discuss how we can use Fibonacci retracement levels. Okay, and one of the stochastic patterns. There are 13 specific slow stochastic patterns. In this video, we're going to look at one specific slow stochastic pattern. The pattern that I'm talking about is when the slow stochastic is overbought, it reaches the overbought zone, all right, and then pull back to display a low that is not in the oversold zone. The first low should not be in the oversold zone, and then it went back up a bit and then pull back to display the second lower low, which is now in the oversold zone. So stochastic displaying a low followed by a lower low, and the second low should be in the oversold zone. The first low should not be in the oversold zone. This is a typical slow stochastic pattern. There are 13 specific slow stochastic patterns. This is about a 2-4 SP, digit 2, digit 4, okay, letter S, letter P, 2-4 SP trading material. All right, written by myself. Now, so one thing I need to say to traders, when we are using the stochastic pattern, we are not trading the slow stochastic itself, we are trading the price, the price itself. The best way to fool a trader is to move the trader attention away from the price itself. Okay, so if you are trading using the slow stochastic or MACD or RSI, 70% of the time your attention should be on the price, because this is what we are trading. If you are anywhere in the world, okay, we are all looking at the price itself. You may have a different setting for your indicator. So here I have the stochastic 833. Another trader may use a 733 or 12.5 or whatever, but the price is the same thing for everybody else. That's why I say to traders that the price is the #1 indicators. Okay, I have some drawing on my chart. I need to tell traders I have a bit of flu here, so time to drink my lime sip. All right. So if you see me coughing, please accept my apology. Now, I have some drawing on my chart here. All right. So what we are looking for, I'm going to color the middle line into pink. Okay, I'm going to explain everything to you now. So we have a blue rising channel, okay? Blue rising channel. The pink line is the median line of the blue channel. You need to pay attention carefully. So what we are looking for is a strong bullish progression. So the price is above the median line of a rising channel, going up big time, because the momentum is very strong. The market sentiment is viable. Okay, the market sentiment is very, very bullish. The price will ride, okay, the section above the median line of the rising channel until the momentum is weakening. The price will try to retest the median line. So we want to see first condition, price above a median line or a strong bullish progression. That's what I meant by above the median line, a strong bullish progression. Price pulling back to retest the median line of a rising channel. Price try to go up a bit without displaying a new high, and then price breaking below the median line, retesting the lower part of the channel. This is one example, okay, when we see the pattern that I'm talking about here, the slow stochastic pattern. Price stochastic is overbought. Stochastic will be overbought at the top of the channel here. Okay, the first low, that is the price retesting the median line, will be the first low of the stochastic, that is not in oversold zone, followed by the price pulling back. My apology to traders. All right, followed by a pullback to retest the lower part of the channel, bringing the slow stochastic below the oversold zone or into the oversold zone. All right, so the pattern that we are talking about, stochastic pattern, okay, which I share with traders, though we have 13 specific slow stochastic pattern. I'm talking about this openly. Overbought, first low, followed by a lower low that is in oversold zone. I want to show you one example now that is a bit complex for traders. When a trader is trading a slow stochastic instead of the price, the trader will get into trouble. But we are talking about how we can combine the slow stochastic pattern and Fibonacci. So once we see the pattern, we will draw the Fibonacci, okay, use the Fibonacci retracement. So at this point in time, right here, we will draw the Fibonacci retracement, all right? You see here, from the beginning of the strong move, okay, to the end here, and to see how far the price went down. Okay, so price break, you see, retest the median line, pull up a bit without displaying a new higher high, and then pushing it back down to retest the lower part of the channel. Then we will use the Fibonacci retracement tool. Very often you see that the price will push it down into the zone of 50%, sometimes 61.8, in a very, very strong bullish progression. The price, this pattern where you see 1, 2, 3, slow stochastic oversold, okay, display a low, followed by a lower low that is in oversold zone, okay, in a very strong bullish progression. It will be in this Fibonacci retracement level will be 38.2% Fibonacci retracement level. I need to mention to trader that if you see this pattern like this, bullish progression above, okay, the median line, retesting of the median line, price went up a bit without displaying a higher high, and then a price retesting the lower part of the channel. Very often, the Fibonacci retracement level that we are watching is 38.2% Fibonacci retracement level. Note it down. What I just said now is so important. You may replay, you can okay, move the video back and play that session, because I'm not going to say it again. Price is above the median line, retest the median line, find a support, went back up a bit, but failed to display a new high, but push it back down to retest the lower part of the channel without going out of the channel. So everything is happening inside a bullish, okay, channel, telling us that the bullish momentum is still intact, all right, unless we are at a resistance zone or at a conversion point. That's a different matter. I don't want the video to be too long, so I'm going directly to the point, all right? All right, talking about multi-talented trading, we are discussing one strategy here. This strategy does not negate or, okay, invalidate other strategy that we have discussed before, all right? Because sometimes traders learn something new and they forget something else. All right, don't trade like that, okay? Don't trade like that, okay? Otherwise, you're not going to learn anything. Sometimes you learn something new and then you discard the previous one. That's why traders build 100,000 of trading system, and because once they learn something new, they dump the old one and then they go and learn and they build a new one, because they are not working with what is stable in this market, what we call the market stable data, or the market pattern, rising channel, declining channel, horizontal channel, trading drill, trading triangle, all right, and market environment, okay, combining the technical trading and the fundamental, all right. So this is one example here. So let's look at one example here. You see here, I'll show you what I just shared with you now, so you can see the price is in a rising channel, yes or no, the blue channel here. All right, let's draw the median line. If you accept that somewhere here, you can see in this section here, it just breaks through it directly here. This is not what we are looking for. This is not what we discuss here. It must go up a bit. So here we have the example that I'm looking for in this session. Okay, so price was going up, you see here, but you can see that the move has started below the median line. It's normal, okay? Here, the example that I was telling you should be above it. This should be a beautiful example normally, but it didn't bounce. So it didn't bounce before coming here. You just break through it. So our strategy has canceled. So this should see here. Okay. So now we can say this session only. So it was above it. Yeah. This session here. And then pull back. It went back up without displaying new high. And then back down to retest the lower part of the channel. Everything happening within the rising channel. This is a typical slow stochastic pattern, but here you can see that we did not violate the market pattern, and we are trading the price itself, not the slow stochastic. At this point in time, we have a bullish setup. Now we will use the top-down trading method, the setup, the signal, and the low-risk entry point. All right, for investment purposes, we will check Google Finance, Yahoo Finance. If you are trading currency, we will check the economy news. All right, as I'm recording this video today, okay, on the 4th of December 2014, the time in London, 11 p.m. I need to remind traders that tomorrow is the non-farm employment change for traders that are trading currencies, a high-impact economy news. Be aware of it, okay? Going back to our subjects, okay, so this is the pattern. Low, stochastic display low, that is known in oversold zone. Pulling back to display a new lower low that is now below the oversold zone. And the prior retest in the lower part of the channel. The first retest is usually, sometimes you may see some distortion on the median line, and the second one on the lower part of the channel. It's a bullish setup. Trader will now, if you are trading this stock at this point in time, Walt Disney, you go to Google Finance, perform the Google Asset test, check the fundamentals, or check Yahoo Finance, okay, and validate the technical bullish setup. At this point in time, then you go to the signal time frame, waiting for the signal. Once the signal is fired, you will analyze the risk-reward ratio. Is it worthy putting my money on this beast? All right? Is the risk too high for me? If the risk is too high, I'm not interested. It's not because I have a bullish setup that I must definitely enter the trade. I don't have to. All right? I don't have to. If the market environment is not bullish, but I have a bullish setup, I will ignore it. All right? The opposite is also true. When the stochastic is in oversold zone and then display a higher low, okay, all right, followed by another higher low, okay. All right, I don't want the video to be too long. All right, the opposite is true when the stochastic will be in oversold zone, okay, and then we display a higher low, a high, okay. That is the opposite is a high, display a high followed by a higher high, all right. Okay, so the stochastic will be first in oversold zone and then go up to display a high followed by a higher high that reaches the overbought zone. Let's leave that one alone. We are concentrating on this pattern when the stochastic display a low that is now in oversold zone followed by a lower low. When the stochastic start the move from the overbought zone. But we must use the market pattern. This will allow us to make excellent decisions. Once we see the pattern, what do we need to do using Fibonacci? Here the move has started below, was not completely above the median line. This is what we are talking about, the reality of a messy market. All right, going to remove, okay. Now, once we see that, we will use so the move has started here. Okay, hold on, please. Once the move is completed, we will use the Fibonacci retracement. So the move has started here, okay, went all the way up here and pulled back. As you can see, it's 38.2% level. As I explained to you, if the pattern is within a rising channel, okay, very often you will see that it will stop at 38.2% level. Doesn't mean that whenever it's at a 38.2% level, definitely this will go up. Doesn't mean that. If the fundamental, which what we call the fuel, okay, the market sentiment, okay, and the fundamental are not solid, the price is not because we have a technical bullish setup that the price will definitely go up. All right, check the fundamentals and then trade like a pro. All right, trade like a pro. So this is a bullish setup at this point in time. Once we check the fundamental and we are satisfied with this stock, Walt Disney, we will be happy to enter the trade at a low risk entry point using a top-down trading method. And as you can see here, this has worked beautifully and the price is going up. Traders who understand Fibonacci extension will be setting their target at 161.8% Fibonacci extension zone. It makes sense. It is also powerful. This is about how to combine, okay, a stochastic pattern and a Fibonacci retracement. All right. There is another example here that was a bit messy. All right, a bit messy. I got 5 minutes more left. You can see here the stochastic was the stochastic 830 was in overbought zone. Display a low that is not in oversold zone, followed by a lower low that is now in oversold zone. If you pay attention carefully to what is happening here, I'm going to place a vertical line at the section where the stochastic was at the first time. You see the white line here. Hope you can see on your chart. This section here. The prior was here. All right, going to color it blue or green. Green will be better. Green vertical line. So the first low by the stochastic here, the prime went directly to retest, okay, the lower part of the channel. This is not what we discussed. All right, this is not what we discussed here. Okay, you see here, it went directly. The first low normally shouldn't be, okay, going straight away to retest the lower part of the channel. Okay, it should be retesting the median line, and then the second one retesting the lower part. As you can see, the first part went directly, the first low went directly to retest the lower part of the channel. Now, another thing I want trader to understand, what do we say? We want to see a strong bullish progression. Look here. Can you call this a strong bullish progression? It was not a strong bullish progression. You will agree, yes or no? All right, so remember, we want to see a strong bullish progression before the stochastic pattern. I need to remind traders that at both TSTW24, TSTW-SYS008 traders, and those who have purchased the 24SP trading material are using, okay, the stochastic pattern. What I prefer is that trader asks me questions about these patterns. So if you are 24SP trader or TSTW-SYS008 trader, and you have been applying the stochastic pattern, and you come across some challenging setup, or the pattern has failed, send us email with the chart and ask us a direct specific question, and we will get back to you. And this will help you to understand, or to help you to master, okay, the trading tool, all right? Because sometimes it's pointless to buy something and you use it, you see, oh, it's not working, but you can ask a simple question and we will get back to you as soon as possible. This is what we are doing here to explain to traders, as traders will see now what's happening here. We have the pattern here, you see a low followed by a lower low. But this is not the setup, you see here, in this section here, this is not. As you can see, the prime went down more. Why? You see, though we have stochastic was overbought, a low followed by a lower low that is in oversold zone. If one is trading a stochastic alone, one will enter the trade here. Now you can see it went up. We on the weekly chart. Okay, it went up a few weeks. All right, to retest the channel. All right, it's not beautiful. So remember the pattern that I showed you beginning. We will prefer it to be we want a strong. Here you see there is no strong bullish progression. It's not very convincing. All right. So this is the pattern, strong bullish progression, retest the median line. Here it was not completely above the median line, start below, this is normal, and then when above it, retest the median line, pull rally up a bit without displaying new high, and then come back down to retest the lower part of the channel, and then we will use the trading drill and the trading triangle, checking the fundamentals, and combining the technical trading and the fundamentals. This video, I want this video to be below 20, but I will go above it. My apology to traders, because I haven't finished to share my trading tips with you. So I'll continue this recording here. All right? All right? So now, so you can see that though we have a slow stochastic pattern, what we are talking about is not happening here. I want to show you another one here. this is a new pattern, you see. So the first thing that I will show you here is this one here. The second drawing, pay attention to the red rising channel. Can you see a red rising channel? This is it, okay? All right? The price, we want the price to be going up, okay? To be going up. Reasonably bullish. All right? Does not have to be too strongly bullish, but reasonably bullish in a rising channel. So the price originally is in a rising red channel. You see here? So I represent the price by the orange line here. Can you see my drawing? The orange line represents the price within the red channel, okay? So the first thing that we want to do is the price, we want the price to do is the price to break out of the channel completely. Phew. Okay? So first condition, price in a rising channel, reasonably bullish. Second condition, price breaking out of the channel completely. You have to understand the first example, the price did not come out of the channel, but the price was retesting the channel. But at this point in time, what I'm showing you, the second example, the price coming completely out of the channel. Okay? Next, we want the price to try. Repeat, try. The price will try to retest the lower part of the channel. Sometimes you may even go inside it. So remember, to go up again a bit without displaying a new higher high. But the price first came out of the channel. Now it rallied up a bit, but without displaying a new higher high. And what I want traders to do in this point in time, at this point in time, I want to use what we call, okay, the market geometry. So once the price out of a channel, what do we need to do? We need to project the channel in the direction of the price. So the channel that we are talking about, the first channel, is the red channel, yes or no, okay? Once the price breaks out of that channel, we will project the channel to the downside. If you break above it, we project the channel to the other side, okay? It makes sense? So this is my projected channel, okay? It's not perfect. Okay, something like that, okay? So normally, when a price is breaking out of the first channel, which is the red one, the price will try to retest the median line of the projected channel. Are you with me? Are you confused? The projected channel is the second channel. The first channel is the red channel. Because the price out of the first channel, breaking below it, we project the channel to the downside. This is about the market geometry. All right? So we project it here. That's the second channel here. All right? Between the red and the blue here. The median line of the second channel, I'm going to color it again into pink. So the pink line represents the median line. So price coming out of the first channel and trying to retest the median line of the projected channel. That's what we are looking for. Price rising in the first channel, break out of the channel, trying to retest. Sometimes it may not retest the median line, but it will try to retest the median line of the projected channel, right? And they try to go back up to retest the edge of the first channel without displaying a new higher high, and then pulling back down to retest the lower part of the second channel. So the first example that I tell you, the price was in one channel, retesting the median line and pulling back to retest the lower part of the channel. The second example, the price was in the first channel, now the price pulling back to retest the median line of the second channel for the first time, rally up a bit and retesting the lower part of the second channel. So what is happening here is happening in the second channel. Once we see that, we will pull out our Fibonacci retracement tool to see how far the price went down before the pattern is completed, the stochastic pattern. Overbought, a low that is not in oversold zone, followed by lower low that is in oversold zone. But as I'm telling you now, the drawing, the market pattern is very, very important. So we can filter out the false slow stochastic pattern or the false price pattern. It makes sense? You see now? You see now? It makes sense? Okay, if you like this video, give us a thumbs up. If you truly like it, share it, okay? All right? If you think I'm crazy, put it that I'm crazy there. People call me crazy already, so I get used to it, okay? Because I share a lot of things for free. Some traders are jealous. They say, why George, you sharing all this? Okay, I like to share some of, my trading tips with my friends, okay? It makes sense? It makes sense? Remember, this is a technical setup, okay? At this point in time, once we see the setup is like this, they say, oh, well, this is what George is talking about. This is a bullish setup. Okay, what do you need to do next? Okay? You are trading stock, you go to Google Finance or Yahoo Finance, you are trading currency, you check Forex Factory, you check the economy, you check some economy news at the Bloomberg, Financial Times, okay? You are trading Euro USD, all right? You're comparing the Eurozone to the American economy, all right? Check what's happening with the central bank, what ECB is doing, what their policy, are they devaluing their currency, all right? Currency correlation and the blah, 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 okay? Do a bit of, okay, mind game, all right? What we call due diligence, okay? Because the old way of trading, okay, have gone, okay? We don't want to use the technical loan because the big market players are hedge funds, the banks, the big institutions are using the fundamental analysis. The fundamentals are the fuel, okay, that propelling any financial instrument. So, though we are technical traders, we want to combine technical trading and the fundamental analysis, okay? So here, you see here, for this channel here, you see the first channel here. Okay, let's squeeze it a bit, all right? So price out of this channel here, that's why this one has failed. So now let's go back and look at it carefully here. So you will say, oh, George, your stochastic pattern is useless. No, it's not. It's not useless. Can I show you it's not useless? It's powerful, in fact. Okay, so what you need to do, price came out of the channel, okay? Something like that. You can see that the price did not, if you project the top channel here, okay? It didn't come here. But we have a channel, okay? Okay, we have a channel, yes or no? So we project the price out of it. So the first one did not bring it out, as you can see. The first low did not bring it out. It's the second one that brings it out. Are you with me? So there is a bit of distortion here, because that's why I want you to understand this pattern. The first example that I show you here and this one here. So with that, you will be able to master this specific stochastic pattern. When the stochastic was overbought, display a low that is now in oversold zone, followed by a lower low that is in oversold zone. We pay attention to the drawings, okay? But now this will allow you to make excellent decisions. So you can see that here, the first low in normal condition, if it's going to be nice, either it will retest the median line of the first channel, or it will bring the price out of a channel. So either the first low, this is the condition, either the first low of the stochastic is retesting the median line, or is bringing the price out of the channel completely. Here, we can see that the first low here did not retest the median line, but retest the lower part of the channel. So we know there's a question mark. So we don't want it to do that, okay? We don't want it to go, the first low, to retest the lower part of the channel straight away. So there's a question mark here, you see? Okay? So now, because it did not bring the price out of the channel, and also it went directly to retest the lower low, the lower part of the channel, you see here, the second part, let's draw another vertical line there. Going to color it now into quad. That's why I want to allow this video to be longer than 20 minutes. You see? So here, the second low, you see this one, that is now in oversold zone, is the one that is bringing the price out of the channel. So we know that there are more to come. There are more to come. Now, you see, it's a messy one. This is a bit difficult for some traders to understand. All right? But again, though the pattern is not very beautiful, a low and a lower low, as I say to traders, we will say, suppose you are here, you say it's a bullish setup, okay? You check the fundamental, probably the fundamental were weak, all right? We're in 2011, all right? All right, 2011, what was happening? Okay, a bit of a messy market during that time, okay? So, you see, it went up a few weeks, so it's not too bad. It went up a few weeks for swing traders, all right. You see, it went up a bit to try to retest, okay, the lower part of the channel. So we are now here. But the pattern is completed before now you see, down out of the channel and retest. But the pattern is completed here, all right? So now, if you are trading a stochastic alone and you do not understand what is taking place, you will think that the move will continue to go up. It didn't. So finally, you should sell again on the edge. So breakout, retest, you see here, out of the first channel, projection of the channel, retest the lower part of the channel, and now down. By that time, the stochastic is already displaying a higher low. This is what we call a divergence. This is a divergence here. Because of the distortion, there was a distortion here, or the market was adjusting itself. It may not be, okay, it's not market. Don't think that distortion is a manipulation. It can be that market readjusting itself, okay? A new cycle is going to begin sometime, the market will readjust itself, or a new trend is about to begin, the market will readjust itself, or the small man is so desperate to buy at the lowest price, all right? So you see that the price came out of the second channel again. Even here. All right? If it come out of the second channel, what do we need to do? We project it again. Are you afraid to project the channel? It's your channel. Don't be afraid. Project it. All right? Just project it. You can project them or leave them on your chart. And then take a valid signal around key level on the edge. See, the third projection, price came out to retest the lower part of the channel. By that time, because the pattern, so in fact, the stochastic give us a leading information here, but the price came to the third channel. You may see that, trader who understand area way, pay attention, you may see that during, a zigzag correction when we see it. I'm now on the weekly chart. I need to mention to traders that I would prefer traders to use this strategy either on a weekly chart, monthly chart, quarterly chart, or yearly chart. But I would prefer weekly chart. If you prefer daily chart, at least use the 2 days chart, because we see a lot of distortion on the daily chart. For day traders, you can look for this strategy on a 2-hour chart, hourly chart, sometimes even, on a 30-minute chart. But at least, if you are day trading, you can look for it on a daily chart and then switch, to the first best time frame or to your entry time frame. All right? The strategy is valid on all time frames, but for day trading, for swing trading, position trading, and investment purposes, I prefer traders to use weekly, monthly, quarterly, or yearly chart. All right? Okay, it makes sense? For day traders, 2 hours, 4 hours, hourly chart, 30 minutes, all right, for day trading. Or you look for, if you are day trading, you can use the daily chart, looking for this pattern. But I warn you already that daily chart, we see a lot of distortion. So, all right? So when we are teaching traders or we are writing a trading system, we want to have a consensus. So we think of every trader and we select, we write a system accordingly. So, but the goal of every trading education is to bring traders to understanding of the price and the market. All right, that's it. The price and the market. If you understand the price and the market, meaning that the market participant, you are likely to make excellent decisions. All right, so that's it. You see now, this is how we can use. So once the pattern is completed, all right. So you see here, this is a bit complex stochastic pattern. Stochastic being a leading over indicator, but we are trading the price. We will use, we can draw, you see here, that from here, Fibonacci, Now, I will not, this one, you see, because it came out. Now, one thing I need to say to trader, very important. If the price come out of the first channel, all right, we must draw the Fibonacci retracement tool from the beginning of the move to the end here before the price came out of the channel. So that's why I'm very reluctant to draw it from here. So it has to be from the beginning right here to the end here. So the move has started from here all the way up here before it came out of the channel. All right. So here you can see that the price was retesting the lower part of the projected channel here. Now, if the fundamentals are not solid, or if the market environment is not viable, okay, the price may continue to go down. But one thing you need to understand, bullish pattern are formed on or near key support level. So apart from the projection of the channel, look for the normal key levels from the yearly chart, quarterly chart. Look for specific key levels because that's how the professional are trading around key levels. All right. Here, if somebody is technical trader using a trading system, and if he or she receives a buy signal at this point in time, but the signal has failed, one will come out here. If one receives a buy signal here, probably the buy signal has failed. I doubt it that a buy signal took place here first time because of the way this candle came up down big time. Very strong, a bearish candle to retest this level. And then just continue here. There should be a buy signal after this tall candle here. But you see, just rolling, okay, onto the lower part of the channel. What I need to tell traders, this pattern, the second example that I show you here, those who understand area wave will know what I'm going to talk about here. Usually we see 1, 2, 3, 4, 5 wave, and then a zigzag pattern, A, B, C correction. Sometimes this correction can be complex, talking about complex Elliott wave, and these complex correction can take, okay, even months, weeks, or sometimes even years, okay. You can see the whole year, this correction was taking place, move down, up, and down. In 2011, all this 2011, all right, it's a big correction. If you draw the Fibonacci retracement from here to here, you can see that the price was retesting the 61, the zone between the 50% and the 61.8% Fibonacci retracement level. This is what we call the sweet spot trading zone. Check the video at dayprotrader.com, sweet spot trading, okay, sweet spot Fibonacci trading, something like that. So for the second example, when the price come out of the first channel, retesting the lower part of the first channel and bringing it down to the edge of the lower part of the second projected channel, all right? The price is likely to come to the zone of 50% and 61.8% level. So for the second example, the level that we are watching is the zone between 50% and the 61.8% Fibonacci retracement level. The first example that I show you when the price is in a rising channel like this, we are looking for 38.2%. The second example when the price come out of the first rising channel into the projected channel, all right? We are looking for the zone of 50% and the 61.8% Fibonacci retracement level. Now we are combining, okay, a specific slow stochastic pattern. Stochastic was overbought, display a low that is not oversold zone, followed by another lower low that is oversold zone. But remember the drawing, okay, we are trading the price, not the slow stochastic. Once we see the setup, it's a bullish setup, we must validate the setup. How? We go to Google Finance, Yahoo Finance, check the fundamental, perform Google Asset test, check the market environment, apply the trading triangle and the trading drill. All right? As an investor trying to buy and hold, as you can see, trader bought in 2011, okay, and now we are in 2014, it's still going up. All right? Okay? Apart from this, to manage our investment or our trade, we can use Fibonacci extensions or the projection of a channel as the price going up, the price now in a rising channel. All right? But for the second example that I show you here, very often traders who understand area wave, we will see 1, 2, 3, 4, 5 wave. This is the multi-wave followed by one A, B, C correction. All right? The stochastic will display a low that is now in oversold zone, followed by another low that is in oversold zone. It makes sense? It is also powerful. To summarize this video, we have two examples of combining stochastic pattern and Fibonacci. The first example is happening within a rising channel when the price will retest the median line of the channel and then rally up a bit without displaying a higher high and then pulling back down to retest the lower part of the channel. The Fibonacci retracement level that we are paying attention to is the 38.2% Fibonacci retracement level. Stochastic will display a low followed by a lower low. We are not trading the stochastic, we are trading the price. This is a bullish setup, We must now validate the setup by going to Google Finance, Yahoo Finance, and or if you are trading currency, we check the Forex factory. The second example is usually the price is in a rising channel. Okay, now the price come out of a rising channel into a projected channel. We are talking about market geometry. When the price come out of one channel, we project the channel in the direction of the price equal size. All right. In this scenario, price will retest the median line of the projected channel, followed by a rally will not display a new high, and then a pullback to retest the lower part of the second channel. Remember, we are not trading the channel. We are not trading the stochastic. We are trading the price. Okay, you want to buy low, and the smart money we buy at the lowest price around key levels. The Fibonacci retracement level that we are watching in this scenario, in the second example, is the 50%, the zone between the 50% and the 61.8% Fibonacci retracement zone. As a trader, one will always use the trading drill. We are looking for a setup, then the signal, and then we will analyze the risk-reward ratio and enter the trade at a low-risk entry point. If the risk is too high, we'll walk away, or even walk away, all right? Walk away from the risk. And, if the risk is nice, suitable for us, we'll can use options. So we can buy a call option, or sell a put option if you are selling. The opposite is also true. In the opposite will happen in a declining channel. All right, that will be another video when I will show you the opposite of this bullish pattern. The reason why we are using the rising channel, because the natural progression of all financial instruments is up. All right. I hope you have learned something from this video also, and we put into use to make excellent day trading, swing trading, position trading, and investment decisions. We are the TSTW SYS008 traders. Until the next time, enjoy yourself and be very happy. If you like this video, give us the thumbs up. If you truly like it, please share it. All right. Feel free to subscribe to our Day Pro Traders YouTube channel, a channel where we are teaching traders how to use Fibonacci retracement, Fibonacci extensions. Until the next time, enjoy yourself and be very happy.